We don't want to rock the boat. That was the central message coming in from Governor Shaktikanta at the RBI's monetary policy announcement today. So rates were unchanged, accommodative stance remains. There was enough talk about how the liquidity situation is not going to be changed around much right now. All in all, exactly what the markets wanted to listen to. It also talked about how the economy is improving at a steady pace, but supply side constraints and increasing prices of commodities, fuel as well, continues to be a concern. So what is the key messaging coming out from the RBI today? Before we get to that conversation, let's listen in to what Governor Das said.
Based on an assessment of the evolving macroeconomic and financial conditions and the outlook, the MPC voted unanimously to maintain status quo with regard to the policy repo rate and by a majority of 5-1 to retain the accommodative policy stance. Consequently, the policy repo rate remains unchanged at 4% and the stance remains accommodative as long as necessary to revive and sustain growth on a durable basis and continue to mitigate the impact of COVID-19 on the economy while ensuring that inflation remains within the target going forward. The marginal standing facility, that is MSF rate, and the bank rate remain unchanged at 4.25%. The reverse repo rate also remains unchanged at 3.35%.
All right, joining me now are Kaushik Das, a Chief Economist, India at Deutsche Bank Research, and Aditi Nayar, Principal Economist at ICRA. Thank you so much to both of you for joining us on the show this evening. Aditi, let me begin with your take on what the key message from Governor Das was. Many were concerned that there would be a policy response to two factors. One is higher input cost prices, and the other is the pace of recovery that we're seeing in the economy right now. But he was very clear that he is looking at it beyond the immediate future.
Absolutely. Today's policy, in fact, there were no surprises as far as we were concerned. The MPC delivered the expected status quo on the repo rate and the stance. And from the RBI side, we also got what we expected, which was no change in the reverse repo rate and some movement toward liquidity normalization. So overall, first key message is that there aren't going to be any surprises. Any movement that is done towards policy normalization is going to be very much communicated in advance, and boats are going to be rocked going forward as well. But to my mind, what was a really, really stark comment in the MPC's statement was the comment that the recovery is uneven, which we agree with, which we know, and is critically dependent on policy support. Now, this, I think, is a very telling statement that the recovery, although it's gaining some strength, it's being perceived by the MPC as being critically dependent on policy support. And I think this is something that tells us that the policy support isn't going away anytime soon. And only when we reach a critical stage where it's demand side pressures which are pushing the inflationary outlook, that is when we should expect the MPC to really move toward changing the stance and then eventually going in for repo rate hikes.
Kaushik, the key takeaway in terms of growth projections seem to be fairly optimistic, saying that, vaccination pace is increasing, consumer demand, at least urban consumer demand, is increasing, and Q3 should be pretty good. But did you also sense the point that Aditi was making, that the growth and the recovery is still patchy? We need to give it some time to be sure that we're out of the woods.
Tamanna, Aditi summarized it well, and in this kind of a crisis that we are in, you can never be sure whether you will get a third wave, whether that third wave will happen in October, November, or will it be in January, March. So from a central bank perspective, it's very reasonable for them to be very cautious on, pulling the plug out before, kind of being very sure that the growth is on a sustainable trajectory. So there is no easy way to know that, even if you are not having cases going up at this point of time. After the festival season in October, will we see a spike in November, December? Then if it doesn't happen like it didn't happen last year, if you remember, November, December, we didn't see much of a spike. But then in February, March of this year, we had a spike. So these things will not be known. And therefore, the central bank will be very gradual in their process of normalization. So it is not surprising that RBI has stressed on that point, that even if we start normalizing, and they have started normalizing on absorbing liquidity, which is like huge. I mean, the liquidity overhang is like INR 13 trillion worth of liquidity is there in the banking system at this point of time. But what RBI is doing, it's like kind of signaling like the US Federal Reserve. What they're saying is that, the US Federal Reserve a few months back said that they'll be reducing their asset purchases going forward. But they told the market that don't use that as a signal for a timing of rate hikes. So don't link the two, that we are reducing the asset purchases means after 6 months we'll be hiking the interest rates. That will require a certain amount of parameters to be met. So RBI in its own way is kind of saying or said today that we have started the normalization process on liquidity absorption. They have discontinued the G-SAP program. But don't take that as a signal that we'll be hiking interest rates anytime soon. By that time, they meant the repo rate, which is the policy rate. But we think that the reverse repo rate, which is at 335 and which is pretty at a low level, that can be increased gradually in the December policy by 20 basis points and maybe another 20 basis points in February.
Yeah. Aditi, another interesting point that the governor made today was that the Indian Central Bank will take decisions based on conditions here. Was this alluding to action and signaling that we've seen from central bankers around the world who are grappling with a demand increase, supply side constraints and liquidity overhang in many parts of the globe? And here, Governor Das making it clear that don't think we will do the same thing everyone else is.
I think he's absolutely making it clear there is going to be the domestic data which is going to guide the policy action going forward, and it's not only going to be what central banks are doing elsewhere based on their own demand, supply, and inflation growth situation. And that also it's not necessarily only going to be the cues from the US Fed tapering which are going to guide our own monetary policy response. So I agree with Kaushik that we're probably going to kick off with a little bit of a reverse repo hike. For us, the base case looks like we might get a 15 basis points reverse repo hike in either the December policy or maybe a little bit later in the February policy, depending on how things pan out, so that the corridor between the repo and the reverse repo first gets narrowed. And after that, we expect that the reverse repo hikes will happen in consonance with the repo hikes. So our expectation is that in the base case, we may get a 15 basis points reverse repo hike in December, followed by a change in the stance to neutral in February, and 225 basis point repo and reverse repo hikes in the April and in the June policy. So this is what we see as a likely calendar of normalization from here on out. But it's going to be completely contingent on how the demand situation revives going forward, whether there is any third wave that comes in, how the vaccination spread going forward, and also what happens as far as the drivers of inflation is concerned. Is it going to remain the supply side which is going to drive up inflation, or is it really, at what point do demand side factors become predominant within the inflationary outlook?
So the way the governor described demand was patchy, which was very telling, because we are seeing anecdotal evidence of demand growing in certain sectors. For example, tourism, those who want to book cars, online sales, etc. But overall, the word used was patchy. Kaushik, what are the other headwinds do you see? And are you concerned about this energy crisis, which now seems to be building up and feeding into supply side constraints?
So there are a couple of factors. One is what the governor talked about, different sectors showing different kind of trajectory as growth is concerned within India. Now, if you think from a global point of view, this energy crisis, the surge in gas prices and, Brent prices have gone above $80 to the barrel. So these are all negative on the margin for growth, because, if you have to, pay for higher fuel prices, probably you'll cut down on discretionary spending on many other items. So that could reduce growth to some extent. So consumption expenditure, private consumption expenditure could be lower if oil prices remain elevated for a long time. Now, there could be a supply response. The government could come and cut excise duty on petroleum products. That could give some relief because government has that revenue pool which they can use to some extent to buffer the inflationary impact. So that is one risk, and it will depend on what kind of response that comes from the government side and how much they cut over what period of time. All that will matter. The second is we are seeing that global economic growth has started slowing down. China is showing signs of slowing down. That is spilling over to the other parts of the world. US growth level remains high, but sequentially growth is slowing down. So all that will have some kind of linkage with exports, which has been very strong for India. But incrementally, as you go forward in the 6 to 9 months, that momentum could start slowing down. And whatever support you're getting for growth, that could also slow down. And most importantly, there would be, this medium-term scarring effects of COVID-19. There's a lot of section of the population in the informal sector which has got hurt very badly due to COVID, and probably part of that is not captured well in the GDP data. So these people will have their highly indebted, and they have seen their savings kind of disappear. So to get back to that pre-pandemic level of trend growth would not be easy, and that is why RBI is being very cautious about the normalization process, that they are trying to take it very gradually. And the last point, the previous point that you made, that about Governor Das saying that will not follow in any other country, because every country has its own unique set of demand-supply issues and the microstructure of markets. So India microstructure of debt market is different from other parts of the world. Our currency is in a very favorable position because of the FX reserves that we have built. So many other countries in the world are hiking interest rates because their currency is depreciating too much and lack of FX reserve. India doesn't have that problem. So we have to take all that on balance and think what is best for India, and that is what I think RBI has signaled today.
Yes. Aditi, the same question to you. What are the headwinds that we are now facing? Is a patchy demand and higher input costs primary among them?
Certainly, these are things that we need to watch out for. To what extent do input prices continue to strengthen and start hurting the producers? What kind of demand we see in the festive season? Will the increase in fuel prices again make consumers more reluctant to spend? Today we got the survey results just a little while back from the RBI as well. And we've got capacity utilization coming down to 60% in Q1, which is in line with what we were expecting. We've got business sentiment, which has revived pretty well in the September round. But if you look at the consumer confidence survey, there is a very modest improvement, and the current situation index of the consumers remains well within the pessimistic zone even now. And this is broadly something which we think is the best proxy we have for the informal sector or the less formal sector in terms of the confidence and the consumption intent. So I must say that the increase in the current situation index is really not very hopeful. Let's see how the festive season pans out in terms of the consumer demand, particularly in light of the rising fuel prices.
Yeah.
And whether at the end of the festive season we can be confident that whatever revival in demand has happened is durable or not.
Yeah, absolutely. It's going to be a big test. Don't just go by what you're seeing in the headlines. In a vast country like India, we have to make sure that everyone is finding more and more reasons to spend, is finding the kind of income they require to move ahead. And that really is the big challenge right now. Thank you so much, Chief Economist at ICRA, Aditi Nayar there, and of course, Kaushik Das joining us in this analysis of the governor's speech today.